Right, so guys, I want to start off this prop firm section by leading by example. So what I mean by this is everyone knows the hype about prop firms and everyone wants to get funded. And so I want to be able to show you guys and give you guys some motivation on why exactly you should stick through and keep persevering and sticking to the strategy. So as you can see here, we've got around 17 accounts and these are all prop firm accounts. Some of them are stage 1. Some of them have just passed stage 2, some of them are live. So there's just a variety of different prop firm accounts. And what I want to show you here is, as you look at all 17 of these accounts, you can see he's up 6.8%. This person's up 11.29%. It's just all of it. Look, just take a look at all of these 6.9%. As you can see, like once you start learning this skill, you can see that you're able to just pass these prop firms like it's nothing. I can show you all of these accounts for days. But the main ones are this one over here, this is stage 2 passed, even though I made him double the amount. Same with this person over here. Sorry, not this person. Same with, you've got this person over here. Stage 2 passed with him as well. Where's the other one? You have this client that's just got a payout, 5k payout. Let's see if they've withdrawn it. Yeah, if we take a look here over here, you can see a 5k withdrawal. So the balance has been withdrawn right over here. So the reason I'm showing you these accounts is based off the fact that you can also do this, and this mainly happened due to this banger of a trade. So I'm going to give you guys a trade breakdown of exactly how you guys can also catch these pips and how to really know the secret of exactly when to enter, because I feel like this edge which I'm about to show you is really the most powerful edge you need to be able to catch these huge plays over here. So let's go through it together. So this was Euro USD on the 4-hour time frame, like we've discussed, and you've gone through the course material. We need to determine our direction. Now, from this high point over here, you can see this bullish candle broke this high point. This is again a very pivotal point because now we switched from bearish to bullish. So now I want to be looking for buys and buys only, due to the fact this supply level here at 1.09174 has been broken. Now we look for opportunities. In this case, a nice opportunity presented itself right over here from this level of demand. So you can see price was in a nice uptrend. So if we look at structure, I've got this highlighted tool over here, which signifies the most recent level of supply. So we're currently bearish, and then as you can see, what happens from this point, we see a nice break. So we've broken above this high point, and now we're retesting that same point. So if I, in other words, drag it across, you can see we've simply just got a break and retest of this very important level. And I've just highlighted this level of supply from demand from over here, as it makes more sense. So you can then now see price is now within this sort of accumulation region right over here. So we've seen a nice push up, and we've created a higher high and a higher low point, and now price is just accumulating orders within this region. Once we see that and we know we're looking for buys, this is where we can now zoom in on the 5-minute time frame and look for entries. Now again, the most powerful edge I can give you guys is the volume tool. The market is based off supply and demand. The market is based off if there's more buyers or more sellers. So the volume is very important. It goes without saying. It should not be looked past. If you can use this indicator very properly, it can help you build up confluences and stack them in your favor and definitely get those winners. So in the 5-minute time frame, we're at this level of supply. We're currently bearish. If we use this tool, so we're forming lower highs and lower lows, and this is our next retracement up. So price has retraced. However, we expected a lower low to be created. In this case, price failed to create a lower low, and it also failed to create a higher high. So at this point, we can conclude price is just consolidating. It's not forming higher highs, nor is it forming lower lows. So we're just consolidating until we can either break above this high or break below this low. So this is exactly why I've highlighted this green line over here, because I want to see either a break below this level or a break above this level. In this case, you can see price came up, broke above this level, so now we are in a mini uptrend. Even though we are overall bearish from this strong level of supply, we're in a mini uptrend because we've broken these highs. So we're forming higher highs, which are these, and higher lows, which are these. So now we can see that we're in a mini uptrend, and this is a strong level of demand right over here. So the next logical thing to do is wait for it to come back into that level. So you can see price is pushed up, we're in an uptrend. However, now we're forming small structure to the downside. We've retraced, held this level of mini supply. However, again, we expect a push down, but we failed to create a lower low. So from this point over here, price failed to create a lower low. And now if we look at our volume tool, you can see price over here gave us an indecision candle. So we can't really do much here. However, the next candle was a bullish engulfing volume bar. If you see here, this candle has more volume than the candle that came prior to it. Now again, it has to be the opposite candle. In this case, it's showing as a blue candle, but rather it should be colorless because it's neither bullish nor bearish. So you can use indecision candles to be engulfed, or if you want to play a bit more safer, you can see that at this point right over here, if we take a look over here, you can see that this candle right over here is much more larger than this candle here. So if you drag it down, this volume bar has more volume than this bearish volume bar. So again, this is a bullish engulfing volume bar. So if you want, you could have entered right over here to be a bit more safer, like I've told you in the strategy. However, I was a bit more aggressive, entered here. Stops using the ATR. Again, it's very important to have a reason for exactly why your stops are being placed right over here. So at that time, stops were around 3 to 4 pips. So I placed my stops around 3 to 4 pips below this low point over here, which was exactly here. Then CPI news came out. So if you come right over here, you can see at 1:30 p.m. on Forex Factory, CPI news came out, and that gave us a huge push to the upside, pushing past our level of supply and coming into our TP, which was this gray line highlighted based off the 30-minute time frame. If I show you guys that properly, you can see TP was right around this level over here due to this sort of accumulation point. However, I continued to hold it because it was such a strong push up, and I ended up closing at this point over here. So this alone was a 1 to 6 RR. If you was risking 2% on this trade, you would have made 12%. That's able to pass any single prop firm challenge in one single trade. So this is why you should focus more on perfecting the strategy than just taking random challenges. And then you'll be able to produce results like I have over here, where you're literally just taking winners back to back to back. This right over here is a 300k account, just made 30k on his account, and that's a nice 10% gain. So just doing things like that will really help you, and I'm leading by example by giving you some motivation on what really is possible out there.